Hi, welcome to the Market Alert for Friday, the 12th of January 2024. So yesterday, hot inflation hammers hope as crypto rips and yield curve bull steepens. Bitcoin and bonds bid as buying food costs more than ever. And also the main headline there, CPI hotter than expected in December, super core accelerating. Did Goldilocks just die? Meaning, will there be any reduction in interest rates? With that sort of subhead, I suspect not. And also something to keep in mind with regards to inflation, it's a bit like any market. You get the first bit, you get the pullback, and then you get the final bit. And it could be a case that we're starting to see that inflation is going for another run here. Stocks and bonds and dollar whipsaw to hot CPI while Middle East tensions rise. Well, that's exploded overnight. If we look at the mainstream news with regards to that, war seems to be breaking out everywhere in the Middle East. And Von Greyer's great chap to listen to, financial system has reached the end, Von Greyer's. The world is now witnessing the end of a currency and financial system which Chinese already forecast in 1971 after Nixon closed the gold window. And I don't need to say more about gold, do I? The fact that all of the world central banks have been buying gold since 2010. They wouldn't be buying it if there wasn't a reason to buy it. And it's not about inflation. It's about long-term protection of assets. When the 1971 Nixon closed the gold window and the gold standard disappeared, and they've just printed into oblivion. So yeah, it's going to come to an end at some point. So we'll just have to wait and see. Economic news today. It's let's have a quick look. GDP for the UK. We've got core PPI for the US, and then PPI for the US at 1:30 as well. So not too much news today, but keep an eye on the geopolitical situation that's festering in the background, because it's starting to heat up a bit out in the Middle East. Okay, let's move on and have a look at the market's reaction to this higher than forecast CPI number during yesterday. Starting off in the Dow, market sideways, recovering well yesterday. The market down when the news came out with regards to the CPI numbers, and up again on the overnight above the 5-bar moving average, despite, like I say, the escalation of war in the Middle East. Market was already down, and then obviously this is the CPI numbers and the kickoff of the Dow. But look what happened later on in the session as we got to 6 p.m. That classic plunge protection sort of move where the market was brought back 76% of the decline from the high to the low brought back, and overnight the market's now found stability, and the DP is lending support to the market along with the 50 EMA there as well. So it won't be long before we get back above the high, and those highs of course are all-time highs now in the Dow as well, which you can see there. So the market's due for a bit of a serious correction, and with everything looming in the background, doesn't look like it's too far away. Let's have a quick look at the German DAX. This too yesterday sideways, down and then back up. Huge volume yesterday, but up on the overnight, which you can see already. Stuck in that sideways move, needs to get back above 17,004 if the market is to make a new all-time high before any correction comes along. Let's have a look at the 30 minutes. Again, you can see yesterday we sold off and then went further when the release of the CPI numbers came out. Market bouncing, but not above the DP yet, but trying earnestly to get above this level overnight. 50 EMA, 200 MA, and we've got the high up here, which is 200 points away from where we're currently trading for the DAX. Let's have a look, see if the S&P made it to the all-time high. S&P, let's just put some numbers on here. 480, I think it was 475 something, wasn't it? Let's just check on the monthly chart and see there. Oh no, 4817, isn't it? Let me just drag this over so we can see these numbers a bit more clearly. Yeah, 4817, and yesterday's high was 4803. So didn't quite get there yesterday with those CPI numbers coming out hotter than forecast, but still an uptrend intact. I don't think you're going to see a correction until the S&P gets that all-time high. There you can see it attempted in the morning. Then we've got all of the news and then the rally back and at the DP as well. So an interesting level for these markets this morning, because the DP, obviously, if it's above, it's considered bullish. If it's below, considered bearish. Meanwhile, in the UK, different view here, whether it's the sub-postmaster thing at kicking off or whatever, putting pressure on the markets with some obviously huge payouts, and rightly so, then excuse me, you can see I've got a bit of a decline there in the UK FTSE 100, and also that decline taking place and accelerating to the downside yesterday. Market sideways twice, but still below the DP, the 50 EMA and the R1 there as well, and the 200 MA. Let's have a look at the US dollar, see how it fared with the release of the numbers yesterday. And in the US dollar, the market not really reacting too much at all. The dollar spiked and then is now moving sideways and becoming sandwiched between the 5 bar and the 20 bar moving average. So again, a bit of a coiling situation going on there. So it'll be interesting to see how that one pans out, particularly if the war continues to escalate in the Middle East, which it appears to be doing so at the moment. So in the metal as well, surprise, surprise, they ran the market down to 22.50 and just slightly below. Big volume, market bouncing there a bit during the remainder of the session, and overnight silver prices trading back to the DP as well. There's the decline, no surprise whatsoever if you follow the alert, and the same for gold as well, except gold managed to bounce back quite nicely yesterday with huge volume as well, being saved by the 50 EMA there as it was before, and the time before that as well. 30-minute charts, again you can see the reaction to the inflation. This is complete and utter BS, but there you go. Market moving back above the DP, which means obviously there's pressure in the gold-silver ratio, because silver is below the DP. We'll just go back to there, well, sitting just slightly above it, but compared to gold, you can see is way above there. So let's have a look at the gold-silver ratio. And no surprise, this moving higher too, up to the 92 areas where we're looking, isn't it? We keep looking each morning. Let me just put a line on this chart, see if get some sort of idea of ballpark in at least. So 92 is the upside target, and it'll scream through that with no worries at all as they slam the price further. No doubt starting off today with the LBMA, the London fix at 1 p.m. Okay, let's have a look at the intraday trades for yesterday, and we'll kick off with the first one in the morning session. So the market was sideways to higher when it was waiting for the start of yesterday, and then you'll see prices dipping down there, trading down towards the high before they recover and move back to the upside. Very choppy, but then we had another sell signal which went on to, which didn't work. That one was stopped out before it was filled. Then we had a opposite signal with the buy. I forgot about that one. Then we had the long first, market moving up and just trailing the stop up to the R2. I mentioned the R2 in yesterday morning's alert, saying watch this level, and that's exactly where the market reversed and stopped out. Then we had the shorts, and the market then trading back down towards the R1, and as the market started to come back, getting it out of the trade for another profit. Prices then trading down past the high, down to the close, which was a nuisance really. I've moved the stop down and got out, which could have stayed with that one, as you can see. Prices then waiting for the numbers. They came out at 130. CPI, there's the reaction of the market, down to the S1, back to the DP, and then into the afternoon. And then we've gone from the high of the market, or above the high at the the R2, to the market then coming back all the way to the low, which we see in the afternoon session. The market's choppy to begin with. We then get the short, and then the market moving down, as you can see there, towards the low. As the market comes back, getting it out of the trade, and the shame again, because the market traded sideways for a bit and then continued to the downside for another 50 points there. But on the whole, good day, good reaction to what was going on in the market. And let's have a look at the overnight before we finish. So there's your daily chart sideways, just as we saw in the advanced charts. And overnight, the market is sideways below the DP at the moment. Let's just compress all of the line so we can see where we are. Obviously, if we're at the DP, we're sort of equidistant from the low and the high, but again, not quite, because the high is up there at about 180 points, and down to the low where we're currently trading is about 120. So that's the direction of where the market's likely to go today. We've got these sideways moves at the moment. We're above the 200 MA and all of the other averages. So I suspect it's going to come under pressure today, certainly because of what's going on in the Middle East. And now we've got those CPI numbers looming as well in the background, that it hasn't gone away. So we'll see what happens. We just have to follow what we see. Okay, that's it for this one, and the last one for the week as well. So have a great weekend, and I will see you in Monday's edition of the Market Alert. So as ever, thanks for watching. See you in the